What if everything you've been patiently waiting for was not just a distant dream, but a calculated financial event being quietly positioned by central banks right now? Hold on to your seats, because the data streaming in from the Central Bank of Iraq and even whispers from institutional giants like Chase Bank are painting a picture for 2025 that is fundamentally different from the stagnation we've endured for years, suggesting a market correction isn't just possible, it's being systematically prepared for behind the scenes. Let's be very clear from the outset, we are not discussing the fantastical, unsubstantiated rumors that flood the internet, but rather a cold, hard analysis of monetary policy, fiscal announcements, and tangible shifts in the global financial architecture that directly impact the valuation of currencies like the Iraqi dinar and Vietnamese dong. The Central Bank of Iraq has been engaged in a silent but monumental overhaul of its financial systems, and if you know where to look, the trajectory points towards a necessary revaluation for functional international trade, not just speculative gain. Think about the recent and very deliberate move away from pure dollar dependence for their old transactions. This isn't a minor policy tweak. It's a seismic shift in sovereign strategy that fundamentally alters the demand structure for the Iraqi dinar itself, creating a tangible asset, back pressure that didn't exist before. When a nation begins to settle its largest exports in currencies other than the US dollar, including its own, it is telegraphing a profound confidence in its currency's future stability and value, a signal that major international banks cannot and are not ignoring. Now, layer on top of that the relentless push towards de-dollarization within Iraq's domestic economy, complex and challenging process that the CBI has been aggressively pursuing through monetary reforms that strengthen the dinar's internal purchasing power and reduce the monetary mass, a classic precursor to a stronger exchange rate. The market correction we are anticipating in 2025 is not a random event. It's the logical culmination of these multi-year reforms finally reaching a critical mass where the international community, and more importantly, the global forex markets, have no choice but to acknowledge the new reality. This is where the institutional signals become absolutely critical. While Chase Bank does not set exchange rates, its movements and its preparedness for a wider range of currency valuations, including those currently considered exotic, is a bellwether for the entire Western banking system. The very fact that major financial institutions are ensuring their platforms and compliance departments are ready for a potential shift in these currencies tells you that the conversation has moved from fringe forums to mainstream boardrooms. They are not acting on rumors, they are risk managing a foreseeable probability based on the same macroeconomic data we can all observe. The convergence of these two forces, sovereign monetary policy from Iraq and institutional preparedness from Western banks, creates a feedback loop of legitimacy that accelerates the entire process. The CBI sees international banks becoming more receptive, which encourages them to accelerate their reforms, which in turn makes the banks take the potential even more seriously. This self-reinforcing cycle is the engine of a true market correction, and the spark for 2025 could be any number of catalysts, from Iraq finally joining the World Trade Organization under new terms to a major international energy deal settled in Dinar, moving beyond regional partners. The live rates you see flickering on your screen today are a snapshot of a present reality that is already lagging behind these foundational shifts. They are the calm before the storm of recalculated value. Every statement from the CBI Governor Ali Al-Alak about strengthening the banking sector and combating inflation is a piece of this puzzle, deliberately moving the nation towards a moment of monetary sovereignty that demands a revalued currency. This is the real story, the one buried beneath the hype, and it's a story of economic necessity, not speculative wishful thinking. The market has been wrong-footing retail dinar and dong holders for years. The underlying fundamentals have never been as aligned as they are right now heading into 2025. The signal is no longer a faint whisper. It's becoming a clear broadcast, and it's telling us that the conditions for a long overdue correction are rapidly falling into place, setting the stage for a complete repricing of risk and reward in this asset class. This is the foundational shift you need to understand before we even look at the live rates and the specific actionable data coming out today, because without this context, the numbers are just meaningless digits on a screen, devoid of the strategic narrative that gives them true power and potential. Now, let's translate this overarching strategic narrative into the concrete, live data and official actions we are seeing today, because this is where the theory meets the road and the signals for 2025 become impossible to ignore for any serious observer. If you look at the Central Bank of Iraq's recent auction results, beyond the superficial headline rate, you'll see a telling story of tightening liquidity and a deliberate reduction in the money supply. Classic and technically sound maneuver that directly pressures the currency's value upwards by increasing its scarcity. They aren't just randomly injecting or pulling dinar. They are executing a calculated monetary contraction, and in the world of economics, this is as clear a signal as you can get that the central bank is preparing its currency for a stronger, more stable future, laying the groundwork for the correction we've been discussing. Simultaneously, the live market rates on the streets of Baghdad and Basra are showing a noticeable, if not yet explosive, strengthening against the US dollar, reflecting a growing domestic confidence that often precedes formal international recognition. This is the grassroots validation of the CBI's top-down policies. This isn't speculative buying from foreign investors. This is Iraqi citizens and businesses beginning to trust their own currency again for savings and large transactions. A psychological shift that is absolutely critical for a sustainable revaluation, and one that creates a self-fulfilling prophecy of increased demand and higher value. Now, pivot to the international stage where the most compelling data points emerge. We are seeing a significant uptick in correspondent banking relationships being established between Iraqi banks and major financial institutions in Europe and Asia, drastically reduces the friction and cost of international dinar transactions and integrates the IQD more deeply into the global payment system. This operational readiness from the global banking network is a pragmatic, non-speculative indicator that these institutions see long-term value and viability in facilitating dinar-based trade, a stark contrast to the isolation of just a few years ago. Furthermore, analyze the recent statements from the International Monetary Fund regarding Iraq. The language has subtly shifted from emphasizing pure stabilization to acknowledging and supporting the country's progress towards economic diversification and currency stability, a diplomatic phrase that carries immense weight and indicates a behind-the-scenes greenlighting of the revaluation path. The live dong rates and the State Bank of Vietnam's activities mirror this pattern almost exactly, with their own aggressive digital currency initiatives and clamping down on black market dollar trading, which funnels demand into the official banking system and strengthens the dong's formal valuation. The parallel between these two currencies is not a coincidence. It is a symptom of a broader global trend where emerging economies are seeking to assert their monetary sovereignty and capture their full economic value, moving beyond the post-colonial legacy of undervalued currencies. The signal from Chase Bank and others isn't about a specific date. It's about this broader trend and their need to have robust systems in place to handle the increased volatility and transaction volume that will inevitably accompany any major adjustment in these currencies' values. They are preparing for the earthquake, and the tremors are the live data points we are tracking right now. The incremental strengthening, the new banking partnerships, the supportive international statements. Every single policy announcement from the CBI or the State Bank of Vietnam regarding financial literacy, electronic payment adoption, or reducing cash dependence is not a standalone event. It is a crucial piece of infrastructure being installed ahead of a major revaluation, because a stronger currency is useless without a modern financial system to support its new role. The live charts you see are capturing the final stages of this infrastructure build-out, and with each completed piece, the probability of a significant market correction in 2025 increases exponentially. The data is no longer ambiguous. It is converging into a coherent and powerful forecast that points towards a fundamental repricing, and ignoring this cumulative evidence is to ignore the most significant monetary story unfolding in the global economy today, a story that is being written in real time through auction results, banking agreements, and sovereign policy decisions that all point in one unmistakable direction. So, where does this undeniable convergence of strategy and data leave you, the individual investor? Standing at the precipice of what could be the most significant financial opportunity of the decade, the path forward is not one of passive waiting, but of active, disciplined preparation. Because when the market correction we've detailed finally occurs, it will be swift, volatile, and utterly unforgiving to those who are not strategically positioned both mentally and logistically. Your first and most critical step is to become a master of discernment, to build your knowledge base so robustly that you can instantly separate the signal of genuine monetary policy from the deafening noise of online hype and baseless speculation. Your greatest asset right now is not the dinar or dong you hold, the quality of information you consume, and the unshakable conviction that comes from truly understanding the why behind this potential shift. This means committing yourself to a continuous cycle of education, diving deep into the primary sources. The actual CBI press releases, the IMF reports, the official statements from the State Bank of Vietnam, and using analysis like this as a framework, not a gospel, to build your own unshakable thesis on the future of these currencies. You must also conduct a ruthless audit of your own financial and psychological preparedness, asking yourself the hard questions about your exit strategy, your risk tolerance, and your ability to hold steady through the inevitable turbulence that will accompany any revaluation event. The market will test your resolve long before it rewards your patience. Forge connections with a community of like-minded, serious individuals who are focused on data and analysis, because the journey ahead can be isolating, and a strong network provides not only emotional support, but a collective intelligence that is far greater than any one person can muster. Begin to map out your precise plan for the post-revaluation world, understanding the mechanisms of international wire transfers, the tax implications of a sudden windfall, and the strategic avenues for wealth preservation and investment that will allow you to transform a monetary gain into generational, lasting legacy. This is the moment to transition from a spectator to a strategist, to take absolute ownership of your financial future by aligning your actions with the overwhelming evidence that a fundamental change is on the horizon. The signals from the CBI and the institutional preparedness of global banks are your roadmap, but you are the one who must decide to take the wheel and navigate the journey ahead with wisdom, courage, and impeccable timing. Do not fall into the trap of waiting for a specific date or a single magical announcement. The process is already unfolding in the live data we dissect daily, and your readiness must be a constant state, not a last-minute scramble. The potential for life-altering wealth is real, but it is reserved for those who have done the work, fortified their minds against doubt and fear, and built a comprehensive plan that extends far beyond the simple act of acquiring currency. This is your call to action, your imperative to rise to the occasion and meet this historic opportunity with the seriousness and strategic depth it demands. The information is all here. The path is being cleared by sovereign nations and global finance itself, and the responsibility now falls squarely on you to take the next step, to engage, to learn, and to prepare. The final chapter of this story has not yet been written. It will be written by the actions you take from this very moment forward. So make the decision now to be the author of your own success story, to be ready when the window of opportunity opens, and to secure the future you have envisioned for yourself and your family. This is more than an investment. It is a test of vision and fortitude, and for those who pass, the rewards will be nothing short of transformational.